Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, it's been a wild ride over the last few weeks. It's obviously been shooting straight up. There was one wild day on Thursday, which was the day before Jerome Powell spoke about the Fed to see if we were actually going to be cutting rates. So there was a little, obviously, volatility on that day because nobody was sure. But come back to Friday and things shot back up because he made his announcement and everybody obviously liked it. So the market seems to be happy, which means volatility has obviously dropped way down. So we have to look around the market for something to trade. This is the S&P 500 where we start there. The Nasdaq obviously looks fairly similar, but not as close to its highs as the S&P 500 obviously is. And the Russell always looks to usually be the lagger, but it seems to be a little bit above the Nasdaq. So they're all looking roughly the same. Just the S&P 500 is the strongest. The Nasdaq appears to be the weakest, and the Russell seems to be kind of nearing its all-time highs as well. So what are we going to trade? Well, we're going to do something a little different so we can learn different kinds of strategies. We're going to look at Apple, and Apple has been on a huge ride over the last, let's say, month. Ever since earnings, it took a huge drop in earnings and then has been shooting up to the moon ever since. In fact, if we go from here up to there, you can see on this bar chart over here on the left, it's gone up about 17% in about 3 weeks. 17% in about 3 weeks for pretty much the biggest company in the world. So you're talking about probably $500 billion in gains as far as the value of the company or something in that neighborhood in just 3 weeks, which seems a bit extreme, at least in my book. But anybody, nobody knows the future. So as a contrarian, what I'm going to do is make a trade that says I think this thing may stay around here or start to tumble a bit over the next 45 days. And because volatility is extremely low, you can see it's about as low as it's been for the entire year. We are going to buy a vertical in Apple. And for me personally, as a contrarian, I'm going to buy a put vertical, again with the assumption that over the next 45 days, this thing tends to soften a bit. Could be completely wrong. If you think it's going to go up, you're going to buy a call vertical. But we're going to do the put vertical in this example. So if I go to the trade page, we go over here. I like to use monthly expiration cycles. They're generally more liquid. So this is 39 days. This is going to be 53, about the same. So just for purely liquidity reasons, I'm going to go to the monthly expiration cycle. So I open this up, and when I buy a call vertical, a put vertical, when I think it's going to go down, what I do is I'm going to buy one strike above the stock price and then sell a strike price that's below the stock price. So that means we want the stock price always to be between our two strikes when we're buying verticals. No matter how wide or narrow we make this vertical, we want the stock price between them. So in this case, if I buy this vertical, the 230, 225, it comes out at 225. Does that fit our rules? So when we're looking at buying verticals, we're looking at roughly 50 cents per dollar width. This is $5 wide, which means we're looking at about $2.50 as our purchase price. But again, with buying verticals, there's a lot more leeway. We're not nearly as strict as we are with selling. So in my world, if we're anywhere in the 45 to 55 cent range, that's totally fine. And again, you can do even more or less than that. This totally becomes a personal choice when it comes to buying verticals. 50 cents is kind of like the goal, but anywhere in 45 to 55, or if you're happy at 40 to 60, that's totally up to you, unlike selling when we're very strict. So this is totally fine. 225, we're at whatever, like 45 cents per dollar width or something like that. So that's totally perfect. So what this trade is telling us is if the stock price drops below 225 in the next 45 days, this trade will turn profitable, and obviously we'll decide at that point if we're taking profits or wherever we're looking to close this thing. Generally at 50% of max profit. And again, max profit is always the width of the strikes minus the max potential cost, which is 225, which leaves us 275 as the max potential profit. So we're looking to take 50% of that as our profit goal. We might take less, we might look to take more, but that's kind of the goal we're looking for. We're always looking to close things at around 50% of max profit. So again, if everything stays the same in Apple and the price is here tomorrow, if you're a contrarian, you're going to buy a put vertical and look to pay roughly 50 cents per dollar width. If you're a trend trader, then you're going to look to buy a call vertical, assuming that the stock price is going to continue up from here. And that is our trade in Apple for tomorrow. I am excited to let you know I've completed a book that is now available to everyone that wants to get it, called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero, as far as knowing absolutely nothing about options, all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being, what is an option? You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals, and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.